Anish, your initial take on Exxon earnings?
Good morning. Yes, I think overall it's a pretty weak set of results, especially in the context of some of the European oil majors that reported yesterday. If you take the earnings, it's around 7% below consensus. Those earnings probably actually include some asset sale gains, so I think earnings would probably end up being even weaker than that. I think the key thing that the market is probably looking at is cash flow in the current low oil price environment. Their cash flow generation was less than $7 billion on a clean basis. That looks like it's about 15% below consensus. And I think the key thing on Exxon's cash flow is that Exxon generated, again, I think for the third quarter in a row, 15% less cash flow than Shell. And Exxon has a 40% higher enterprise value than that of Shell. I think it's increasingly hard for Exxon to justify that premium valuation that it's trading on, given the weakness in the cash flow generation.
So we have Chevron coming up in just a few minutes. We've had the big oil over in Europe. So who were the winners so far? And obviously Exxon on the downside this morning. What were the standouts to you so far?
I think Shell was one that demonstrated yet another quarter of cash flow delivery. After a weak first half of 2016, Shell's now generated 4 quarters in a row of pretty strong cash flow, I think showing that it can cover its capex and cover a fully cash dividend going forward. I don't think in comparison, you look at Exxon, it's been kind of 3 quarters of relatively disappointing cash flow in relation to that of Shell. So, yeah, I think that from our perspective, we're buyers of Shell. We'd recommend switching out of Exxon into Shell.
How is everyone doing on $50 oil?
I think in general, the integrateds have adapted pretty well. You go back to 2014 in a $100 oil price environment, the integrateds couldn't cover their capex and dividends at $100. Fast forward to 2017 at $50 per barrel, most of the integrateds have cut capex. They have cut the cash dividends they're paying, but that means that they're now able to more or less fund the capex and dividends in a $50 oil price environment.